Two men walk into the same dealership on the same afternoon. Same job. Same paycheck. They want the same car, the same trim, the same color, off the same lot. One of them drives it home for $655 a month. The other one signs for $851. Same car, same price on the windshield. $200 a month apart for 5 years. Neither of them did anything different today. The gap was decided before either one said a word by a number on a screen they were not allowed to see, and the finance manager was. That is your credit score. 3 digits. You did not choose to show it. You are not allowed to hide it. And it is quietly standing between you and the price of almost everything. The car, the apartment, the house, the insurance, the deposit on your own electricity. It is the only number on you that everyone else can read and you can barely see. So let's read it out loud. 7 scores. Watch what each one costs you for the exact same life, as we climb from the number that locks the door to the number that buys you nothing extra at all. 500. Locked out. This is the floor, and at the floor, the answer is mostly no. You ask for a mortgage and there is no rate. There is a rejection or a referral to someone who lends to people the banks won't. The standard table does not even have a row for you, so you go smaller. You need a car to get to work, and the dealership finance desk pulls the number, and the number talks first. 16% on a $35,000 car. That is $851 a month and about $16,000 in interest alone. Almost $12,000 more than the guy with the good score pays for the identical car. You are not buying a better car. You are renting the same one at a penalty. The credit card offers that come are not really offers. 30%, sometimes more on a few $100s of limit. The apartment you applied for wants a cosigner or an extra month up front, or both. The power company runs a soft check and asks you for a deposit just to turn the lights on. A couple $100s to hold against a future you have not failed at yet. And the cruelest door is the one you would use to climb out. The job you applied for, the one that pays enough to fix all of this, runs a credit check before they hire. And in most states, they are allowed to turn you down for what they find. A low score can cost you the paycheck that would have raised it. The hole digs itself. That is what makes the floor the floor. It is built so the one thing that gets you out is the one thing the number won't let you reach. This is the tier nobody warns you about because the cost is not a higher price. The cost is the word no, and no compounds. 580. The punishment rate. The door is not locked anymore. It is just expensive to walk through. At 580, a government-backed loan finally becomes possible. You can buy a house, technically. You qualify. You qualify for the version of yes that costs the most. The car is still 13%. Almost $800 a month, nearly $13,000 in interest. The credit card sits around 26, 28%. The kind of rate where carrying a balance is a current you swim against, not a debt you pay down. And here is the part that does not show up on any loan document. The insurance company pulls a version of your score too. With poor credit, the same full coverage car insurance that costs a clean driver $2,200 a year costs you closer to $4,600 for the identical car, the identical record, the identical you. In most of the country, that is perfectly legal. 4 states ban it. You probably do not live in one of them. It is not just a car. Insure a house with a low score and you can pay $5,000 a year where your neighbor pays $2,400, more than double, for the same roof, the same street, the same risk of a storm, the premiums, the deposits, the rates. They all read the same number and they all read it the same way, as a reason to charge you more for being short on money. That is a tax on being broke. Everything broke, people need cost extra, precisely because they are broke. You did not get into an accident. You did not miss a payment on this policy. You just walked in carrying a low number and the number got charged before you did. 620, barely prime. This is the line where the real table finally has a row with your name on it. You are a mortgage borrower now. The lowest priced one they will quote, but a quote at last. 7.36% on the $300,000 house, about $2,070 a month. Hold that number because we are going to watch it shrink the whole way up. At 620, over 30 years, you will pay almost $445,000 in interest alone on top of the house. The landlord finally says yes without a cosigner. 620 is right at the cutoff where most of them stop flinching. The deposits get smaller. The credit cards start to look like real cards, and you can feel the relief. That is a trap. After 500 and 580, a yes at any price feels like winning. You sign the $2,000 a month version of the loan and you are happy, genuinely happy, because the version of you from 100 points ago could not sign anything at all. The system does not need to hide the penalty up here. It just needs you grateful enough to stop counting it. It feels like arriving. It is not arriving. It is standing in the doorway, being charged the most anyone in the building pays, and being grateful you got in. The number let you in the room. It has not stopped reaching into your pocket. 660, the near miss. 40 points higher and the room gets quieter. 7.11% on the same house now. About $2,018 a month. $50 a month under the 620 version of you. $50 sounds like nothing. Run it 30 years and the 660 you saves a 620, you almost $20,000. Same house, same paycheck, same life. $20,000 decided by 40 points you cannot feel. This is the cruelest stretch of the climb because it is invisible. Nobody hands you a smaller bill and says, this is what the points bought you. The car loan steps down a tier. The insurance eases. The discount is real and it is silent. And most people at 660 have no idea they are standing 40 points from a much cheaper life. Close enough to touch it, not close enough to be handed it. And you do not climb those 40 points by being a better person. The number does not measure character. It measures history. A thin file because you never borrowed. One late payment from years ago that still has not aged off. A card you closed because someone told you to close it. 40 points of rules you did not write, standing between you and $20,000. And no one at the bank is going to explain which rule cost you which point. The near miss is still a miss, and the system never tells you by how much. 700. Good. Now you are what a lender calls good credit, and good is a word that costs you less. 6.95% on the house, just under $2,000 a month, about $415,000 in lifetime interest, almost $30,000 under where 620 was standing. The flinch is gone. The apartment approves you the same day. The insurance quote relaxes. The card offers come with rewards now instead of penalties. The same plastic that punished you at 500 pays you at 700. The number stopped taking and started giving just a little. And this is where the doors stop being only about debt. The small business you always meant to start. The lender wants your personal score before they will fund it, and 700 is roughly where the real money starts saying yes. The same 3 digits that priced your apartment now decide whether you are allowed to work for yourself. It was never only about borrowing. It is about which rooms you are let into and which ones quietly close before you reach the handle. And from here, the steps get small. 700 to 760 is a few tenths of a percent on paper. It does not look like much, but you have watched this whole climb. You know by now that on a 30-year loan, a few tenths of a percent is not a rounding error. It is another car. It is a year of someone's salary. The fractions are where they keep the real money. One more step, the best one, and then the trick at the top. 760, the ceiling. This is it. This is the best rate that exists. 6.7% on the $300,000 house. About $1,936 a month, and over 30 years, around $397,000 in interest. Put that next to the floor of the standard table. The 620 version of you pays $445,000. The 760 version pays $397,000. Same house, same price, same down payment. The only difference between those two people is the number, and the number is worth almost $48,000. A kitchen, a year and a half of daycare, a small inheritance handed from the person with the low score to the bank for nothing. At 760, the insurance is its cheapest. The deposits are waived. The apartment is automatic. The card is premium. The business loan gets its best odds. Every gate in the building is open and open at the lowest price they offer anyone. And sit with what that $48,000 actually is. It did not buy the 760 a nicer house. It is the same house, the same loan, the same property. The gap went straight to the lender, routed there by the number. Two families on the same street, same mortgage to the dollar, and one of them quietly hands the bank a child's whole college fund across 30 years. Not because they earned less, because their number read lower at the desk. You made it. You are at the top of the ladder that actually pays, which is exactly why the next 90 points are a lie. 850, the trophy. This is the perfect score, the one people frame in their head as the finish line. 800, 820, the flawless 850. Here's what it gets you. The same 6.7%, the same 1,936 a month, the same 397,000 to the dollar. The lender's best tier opens at 760 and then it just stops. A 760 and an 850 walk up to the same desk and get the identical quote. On the car, you hit the best rate even earlier. The mortgage company's own price sheet collapses every score from 760 to 850 into one single line, because to them, you are the same customer. So the grind people do up here, the agonizing over a hard inquiry, the 9 extra points, the 30-point climb to perfect, buys nothing, not a lower payment, not a better card, not a dollar. The score keeps going up. The reward flatlined 70 points ago. And people give years to it anyway, checking the app like a stock ticker, flinching at one inquiry that dips them 4 points before a car they have not even test driven, holding a card they never use because closing it might cost them. All of it in service of a number the lender already stopped reading the moment it crossed 760. That is the quiet joke at the top of this ladder. The system stops paying you long before the number stops climbing. The last stretch is not a discount. It is a sticker for a race that was already won and a prize that was already capped. So here is the thing about the number. You will spend your life being told to raise it. Almost no one tells you what it is actually for. It was never a measure of how good you are with money. It is a price tag. The one the dealership saw, the landlord saw, the insurance company saw, all before you opened your mouth. The same house cost one person $397,000 in interest and the person next to him $445,000. Same house, same paycheck. One number, 3 digits that most people cannot tell you the value of. And it is worth a kitchen. And almost none of this is hidden by accident or against the rules. It is the architecture. The insurer is allowed to charge you double in most states. The employer is allowed to pass on you for it. The lender is allowed to route $48,000 to itself on the strength of 3 digits and call it pricing. The system is not broken. It is working exactly as designed. It is just designed around a number you were never sat down and taught to read. And it never stops being read. It is read when you are 19 and broke, and read when you are 40 and fine. The points you cannot feel are charging you or paying you every single month in the background, forever. Somewhere right now, an 18-year-old is being handed their first credit card, a blank slate, a number that has not started yet. They think it is a piece of plastic. It is the opening line of a price tag that will follow them into every room they ever try to walk into. And nobody is going to read it to them out loud.